We are dealing with notes receivable and notes payable. You will have multiple transactions that have quite a bit of calculations to complete to find the amounts that you need. So let's do the first one where we have a lot of calculations together. It's the November 1st transaction for the discounted note received by R. Chambers on October 15th at Merchants National Bank. So since a customer paid us with a note for items they purchased, we're actually going to be collecting on the note. So we need to record that. We're going to get an increase of cash. R. Chambers is paying off their notes their notes receivable. So we're going to record a credit to that account to decrease it. But then since they're paying on their note, we're going to have some interest. So we need to record interest revenue. But before we can figure out how much interest, we need to do some calculations. But we know the note was for $2,000, so we can go ahead and enter that. Our first calculation is to figure out how much the note would be if it was carried out to maturity. So if we held it for the 60 days. So we have to take our $2,000 and then we're going to add to it how much it would be at the entire time. So we're going to have our $2,000. The note we received was for 6%, so we're going to multiply it by 6%. And then if it was held for 60 days, we would multiply by 60 over 360. And so if we do that calculation out all the way, it's going to give us a maturity value of $2,020. I'm sorry, $2,020. Now we need to figure out how much the actual discount is. And the discount rate is 7%. So we're going to take our $2,020, multiply it by the 7% discounted rate, and multiply that by 43 out of 360, which is going to give us a discount of $16.89. So now we can figure out how much cash we actually did receive. We're going to take our $2,020 and subtract the $16.89, which gives us a cash value of $2,003.11. So that is the amount of cash that we will receive. So the interest revenue is going to be $3.11. Make sure you do show me all of your calculations so that I can see where you might be getting messed up if you are struggling with this chapter. At the end of the assignment, it says you need to prepare the adjusting entries. You will have 3 adjusting entries to give me. Your adjusting entries are going to be those based on transactions with interest, whether it's interest expense or interest revenue. So if you have any questions when you're completing the assignment, please let me know. If you need to, you can send me your file to look at before you submit it. If you'd like me to look at it, just send it as an email attachment within KnowU. Again, if you have any questions, please let me know. I am here to help. Have a good day.